With us, Aditya Welekar joining us from Axis Securities. Aditya, hi, good to be speaking with you. Well, today the stock prices are reacting a lot more positively in India. Globally, the metal prices are not. We are not seeing a runaway rally. How big is this China factor at play, and what kind of implications do you expect on the demand supply now?
Yeah, good afternoon. The question is we have to see whether where we can find the drug, the bottom, whether these moves will move the needle. So that is one big question. So basically, what China is trying to do is to introduce set of credit easing policies in order to boost the borrowing sentiments or borrowing ability of the disgruntled property construction and property infrastructure players. So basically, they want to boost the property sector with this. They have also announced some mortgage easing measures like 50 bps cut in that, and then second-hand down payments for mortgages. So all these measures are step in the right direction, but we have to see whether that translates into the real data. So the data which we have to see is the start in the property construction, which has been languishing in the negative zone since last many quarters. So in the latest, in the month of July, that was the 3-month moving average of the property start was minus 20%. So a real lead indicator for the steel demand is a pickup in the Chinese property starts. So that is where we have to keep focus on. So far, these measures are a step in the right direction, but too premature to come to a conclusion whether it will be good enough to boost the commodities complex upwards.
It's too premature whether it'll have a impact or a lasting impact or not. But then, what are you, advising your clients to do when it comes to the metal pack right now?
So if we see metal pack, we have a clear cut distinction between steel and non-ferrous. So the impact of this property downturn in China is more pronounced for steel stocks and steel prices. So if you see steel prices have not recovered, on the contrary, they are still down, and Indian steel prices are trading at a premium of 5 to 8% with respect to Chinese and FTA countries. So the recovery, which is more pronounced in prices in base metals like aluminum, copper, zinc, and that has more correlation with the Fed rate cut, the easing in the Fed rate cycle. So the recovery has happened in the base metal complex, and steel is still languishing and is in under pressure. So we clearly have a preference towards non-ferrous stocks like Hindalco, Vedanta, Nalco, rather than steel stocks. In the steel space, we prefer non-integrated players like JSW Steel and JSPL, because we have to see, although the steel prices are down, but at the same time, the coking coal and iron ore prices are also down, which offers some amount of respite to the spot spreads. So in such a situation, the non-integrated steel players like JSW and JSPL, they benefit. So in conclusion, on a overall view, if you want to take non-ferrous players are our preference as compared to the integrated steel players like Tata Steel and SAIL.
Lastly, Aditya, before we let you go, on the raw material side, which are those segments? How much of a raw material cost has reduced for, say, the steel companies or for the aluminum companies?
So iron ore, which had peaked at $140 per ton in the start of this calendar year, now it has come down to almost $88 per ton. And coking coal, which used to trade at $240 to $220 per ton, now the spot coking coal prices are down to $186 per ton. So in all, it has reduced. It has offered some respite to the spot steel spreads. But at the same time, for companies like NMDC and Godavari Power and Ispat, so iron ore miners, so there might be some pressure on the pricing realization for these companies. So with the announcement of these measures, we may see some support to these raw material prices as well. Like iron ore, it may find some support, and the prices will also. One point which I want to add is that the Chinese holidays are coming from 1st of October to 7th of October, so there might be some replenishment demand also for iron ore and other raw materials. So there might be some pullback and support with the latest announcement for these iron ore and coking coal prices.
Well, thank you, Aditya, for joining us and for giving us all those details. With that,
If you like this video, then like, share and subscribe to ET Now.